Hello everyone, thank you very much for tuning to another quick educational video. In this content, I'm going to go over kind of how I identify price action structures and patterns in any market, specifically how to identify higher probability setups, right? I have many people messaging me and asking me questions about structures and patterns and how I um, identify which one is the higher probability ones, which one to take. Certainly don't mind kind of go over how I understand price action structures and patterns and how to identify the valid ones. Okay, and I think this video will help those traders who are still grasping how the market moves, what kind of entries to take, and how to eliminate um, mediocre trades. And this is how you're going to filter out lower probability structures and focus on the higher probability ones, which will give you the higher risk reward and the higher probability that the trade will go to the wins. So let me get started. I'm going to use Ethereum as example, just because I have people ask me, the style that I'm looking at, does it work for any market? It certainly works for any market. Okay, it's not the market it matters. It's because how I look at it is from a price action structures and pattern point of view, where it's what market, what instrument you're looking at is totally irrelevant. It's just how the market is moving, and we're just looking at it strictly from a structure and pattern point of view, and how to capitalize the continuation corrections in order for you to take the next run. Okay, so let me get started. Let me get started with Ethereum. So um, let's go over kind of what makes a higher probability setups. Okay, a higher probability setups. The basic understanding of structures and patterns, the way how I do it over and over, is that we understand that there's always going to be an impulse, there's going to be some sort of correction, and there's going to be another impulse. This is the basic understanding of how the price moves. This is the basic understanding of how the price moves in any market, any time frame. Okay, let me repeat that. Any market, any time frame, because it doesn't matter which time frame you're in. This type of price movement happens over and over again. So why is it important to understand this? Because I look at the market, I analyze the market from a multi-time frame approach, multi-time frame analysis, from a top-down approach. Okay, so in order for me to take or enter any trades, I need to see something that I like on a higher time frame before I consider an entry on the lower time frame. Okay, so let's look at Ethereum. I'm just going to give you an example of why make Ethereum so much a good trade once we see this correction breakout. So let's zoom out a little bit. This is Ethereum on a higher time frame. Okay. So overall, what do we see from pretty much just the latest kind of price action? Well, I'm seeing this as a potential double bottom once price hits here. What's good about it that we know that this was the COVID drop. We know that COVID had a mass impact on all the currency, all the pair, any kind of market. This is the COVID drop. When you see that there's such a sharp move down like this, naturally you'll be looking for some sort of continuation correction to take the trade lower. None of that happens, and this is why it makes price action so interesting. Is that a following by an impulse doesn't mean that a correction has to happen for the next impulse. It can very well be exactly like that. Is you have a bullish push to the upside, and instead of a correction, you don't have a correction. You have a reversal kind of structure, something like maybe something like this, or something along the line like corrective structure, and you see the price naturally bring down once more. So there's no continuation. Instead of it's a reversal structure, and that's the one that you're trying to avoid. You want to wait for a confirmation from the market. Is this a confirmation? To me, yes, it is, because we had this push up from the COVID drop. We didn't have a correction to bring the price down. We have a push up to the upside, and I'm just waiting for some sort of deeper, larger continuation structure to confirm that this move was the impulse, this is the correction, and we're going to get the next impulse. And that is how I look at structures and patterns from a higher time frame perspective. So now that I know that the higher time frame bias is a buy, right? It's a buy out of this structure, it's a buy out of this correction. Then how do I capitalize it? Well, I go on to the lower time frame. So I go on to the lower time frame, I go to this 4-hour chart, and I'm going to find patterns and structures. Because I understand that, let me just do this really quickly. I understand that this can very be well all the correction we need from this move, and we're getting the next move, we're getting the next impulse. Right? It's important to understand how multi-time frame works is that within a higher time frame impulse, just like this one on a daily, you're going to have a lot of lower time frame corrections. Okay, this is where the beginning of the correction, you're going to have multiple impulse correction, impulse correction, impulse correction, impulse to bring the price up. But on the higher time frame, it's just going to be one straight move. But on a lower time frame, like I said, you're going to have many corrections and many impulses. And that is how you're going to identify the higher probability setup. You want to trade with the higher time frame structures. You want to trade with higher time frame impulse so that give you a better, higher probability setup. So let me give you a few examples. Let me go to Ethereum. So if I go down to the 1-hour chart, I did a couple posting on Ethereum because I actually got in the low from the very beginning of here. This is the daily correctional structure. And during this time, I said, wait for a breakout. So we have this breakout to the top. Let me zoom in a little bit, it's easier to see. So we have this push to the upside, all of this daily kind of correctional structure that I've been talking about. And then we end up having another structure, another kind of bullish structure as well. And we have that push to the upside. We zoom in, there's a mini kind of a flag structure right here, right when we broke out this structure. As you guys all know, my way of entering any breakout is once I see a breakout, I'm waiting for a confirmation from the market. Do we have a small correction on the lower time frame? Do we have a valid setup on a correction for me to buy? And that is how I enter. This is where I enter for my beginning of the Ethereum push. I'm looking at this at a structure point of view, looking for the next buy. We have price pretty much impulse way up, breaking out this channel structure. And then once I see that, then I know the next impulse move on the higher time frame is very likely to happen now. So I will naturally go down to the lower time frame and look for any continuation correction. Okay, that is a continuation correction. We go on here. That is a continuation correction from this previous move. Are we getting a correction here? Yes, we did. And then we're getting this push up again. So that was the second trend I'm looking. And the third one, now we're forming a larger continuation correction. Nothing changes because this overall move is still one big impulse from the daily move. So like I said, on the lower time frame, you're going to have multiple impulse correction, impulse correction, impulse, larger correction, and we're getting this next impulse. And guess what's happening right now? We're getting another impulse, and it looks like this is actually breaking out already. Okay, so that's really how I want to capitalize on higher probability setups. I understand that within the higher time frame impulse, like I said, there's going to be many corrections and many impulses. That is how the market moves. Okay, so the more structures and patterns you see within this daily impulse move, the higher probability that you're going to get these continuation correction to take the trade up. And that is going to help you to enter these higher probability setups because they're having a higher probability that the trade will go to its desired direction after the correction finishes. Okay, so that's how I see on that. Again, the key kind of from taking all this is to understand that structures and patterns can and will appear anywhere in the market. Okay, anywhere in the market. It doesn't have to be in that impulse move that I mentioned on the daily. It can appear anywhere in the market, like any time frames also. However, not all of them will play out. What I mean by that, not all of them will, just because you see an impulse and you see a correction, it doesn't mean this next impulse is 100% probability. It's never will, because it has to be, you have to look at it from a multi-time frame approach, right? Like I said at the beginning of the video, you have to look at it from a higher time frame approach, top-down approach. Is the higher time frame, we go to the, does the higher time frame support your bias of the buy? To me, it does, because I have this impulse, I have this bigger, larger correction, and I'm looking for the next impulse. And I've been looking at this over and over weeks ago, because when I start seeing this structure developing, very likely that we're going to get the next push up. So I've been patiently waiting for some sort of breakout once this correction finishes. If we go into the 1 hour, this was that correction, right? And once that finished and I see all these confirmation on the lower time frame, then it's no brainer for me to take the up move. And then any kind of lower time frame correction is ideal entry to scale in for more buy. And last I want to touch about is, like I said, not all the structure fail the way how you want it to, or how the desired structure should be, right? You know, if you see a bullish flag structure, doesn't necessarily means that this trade will go up, okay? Because it has to be paired, it has to be kind of work with your higher time frame analysis. Yes, if you have a bias of a higher time frame bullish move, now, obviously, within this bullish run, you're going to see a lot of bullish kind of patterns and continuation structures to take the buy. However, you're likely to also going to see some sort of reversal kind of structures in here as well. And this is why I said not all of them will work out, is because we go down to the lower time frame. I just even go to some sort of 15-minute charts. You have to understand that when you're looking at it structurally, because we're in this long move, we're in the buy move, so our bias is already the buy. But if you're going to likely to see some sort of structure showing you otherwise, okay? So if I zoom in this here a little bit, can you argue? Let me just kind of do this replay. Forget about all the lines I'm drawing. If we see the price action at this, and I see something like this, we have this drop like this. We have this. Sorry. We have this really massive drop on the intraday charts. Okay, this could consider an impulse on the lower time frame, and we have this really correctional structure, right? This is some sort of a standing channel. You guys been knowing me, that's how I would identify this as a double reason double top. We have this push down, we have this kind of a correctional structure, and like naturally you'll be looking for the next down. But is the higher time frame supporting this move? Are we looking for that kind of reversal, or are we still seeing the daily as really it's in this bullish run, it's in this bullish impulse, and just because on a 1 hour you see some sort of structures on the lower time frame that changes your bias? No, because this very likely is going to drop, but it's just going to be in this corrective nature before the next buy move, and then this is how the market catch people on the wrong side. Okay, and understanding that structurally, if we go to a higher time frame, we know that this is the deeper, larger structure, and we're getting the next impulse. So don't let smaller structures on the lower time frame confuse you, that thinking this move is the buy is finished and we're gonna go for the next sell. Okay, and this is why a lot of traders ask me how to identify the proper structures and patterns to take. Well, again and over again, follow the higher time frame. The higher time frame is going to give you a better bias direction of where the price will go. Okay, and you simply go down to the lower time frame to pretty much uh, prove that your higher time frame bias is correct, because you're seeing these lower time frame corrections. You know that you're in the higher time frame impulse, but you need to confirm that bias by looking at the lower time frame. Are we getting the same story? Are we getting the same kind of bullish structures and patterns to buy to take the next buy? If it is, then yes, your higher time frame bias is correct, and you're looking for the next buy opportunities. But the higher time frame doesn't line up with your lower time frame. So if your lower time frame you're seeing some sort of reversal, you're seeing a potential kind of a bearish flag kind of pattern. But overall higher time frame, we're still looking this as the long. So see that kind of structure. They may or may not work out. Okay, it's a probability thing. Of course, you take 100 of these, you're bound to get certain percentage of these to work, even though you're in an uptrend. But taking a short kind of move in an uptrend, you're still likely to have few trades that you're going to win, but likely you're going to have many trades that are lost. It's just a probability game. So understanding that, don't just jump into any structures or patterns you see. Okay, of course, everybody can learn about structures and patterns online. You can just go on Google and you find out all the structures and patterns that people trade. Simple, but are they going to be valid every time you see them? They sure are not going to be, because if they're not lining up with your higher time frame analysis, they're not lining up with the overall price action move, then it doesn't matter, right? Because that's how you're going to enter those lower probability setups, and those are the ones that's going to take out your profits, and you're just going to be in a kind of a break-even stance where you'll take a few good balance trade setup, you earn some profit, but you'll take these mediocre, lower probability structure setup that they're going to take out your profit. And at the end of the month, you're just, excuse me, you're just dancing around, you're not making any progress. Okay? So I think this is a very important thing to understand, that structures and patterns appear everywhere, but uh, it has to line up with the higher time frame. It has to make sense that, are we in the impulsive stage of the market now, and that any trade in between any correction is a very valid buy, or are we in a correctional stage? Then any buy or sell is likely to be short-lived, because we're in this larger correctional structure. We're just correcting ourselves for this move here before the next buy move. So that is it, guys. That's how I identify structures and patterns, how I identify the valid ones, how I look for the higher probability ones in the market, over and over again. Okay, it doesn't matter which market I'm looking at. It doesn't matter I'm looking at currency, crypto, commodity, equity. It doesn't matter which time frame. I'm looking at the daily now. I know this is the impulse, this is a correction, this is the impulse. Doesn't matter, because how multi-time frame analysis, this is the forward now. We're still getting that impulse, we're still getting that correction. Instead of just one impulse, we're simply just getting impulse, correction, impulse, correction, impulse, correction, impulse, correction, impulse. That doesn't change anything. That is how the market moves. This has to be clicked for you guys, that multi-time frame analysis, that is how it works. Doesn't matter which time frame you're looking at, because the market moves the same. Instead of moving in one straight up, it's just moving more correctively on a lower time frame. So to capitalize, and this is why in my a lot of videos I always talk about, to fully capitalize is to go down to the lower time frame, knowing that the daily is in that impulsive move, and look for the continuation correction, because they're going to happen over and over again in the market. Doesn't matter which market you're looking at. You can do your back testing, and this is why I always tell people to, when people ask me how to identify them, I said, well, not only just looking at the videos or analysis or other people or whatever, take your time, go back testing, use TradingView's replay button, whatever, go back, right? I made a video of back testing as well, feel free to take a look at that one. Do back testing, looking at the structure as it is right now, forecasting what we'll do, and then finish the replay and see, does it go to the desired direction that you were you're forecasting it. And that is how you program yourself over and over again to be a better trader, to let that go to your advantage. So now, when I look at this, I really don't even need these lines, right? People have asked me over and over again, are those trend line matters? No, they do not. Or I can look at it straight up like this. I will still identify this as the correctional move, and then the next impulse. All right, guys. So thank you very much for tuning to this video. I hope I explained majority of detail on how structures and patterns work, and how to find the valid and high probability ones. So as always, feel free to ask me questions and comment, and I happen to answer them. All right. So thank you very much, and have